Hey, what's going on? So, doing this indicator series, and these are two that you could take a look at. I'm not going to do all the hard work for you, but I'm giving you the groundwork. Just type in TBT and type in super trend and go on different time frames and see what you can come up with. But I'm telling you right now, this is pretty strong. So I'll show you a few things. Uh, so one thing you'll notice with TBT is it's pretty cool because it gives you a signal, like right here. It gives you a signal to buy or sell right here. Let me pull this over here so I can know where I'm at. So I can zoom in. So if I do a short or something, I can see it. See, this is TBT, chart prime. So this right here, you know, when you do it gives you a level right here, target level. You see when the arrow is printed. So I've been noticing that it will go down to the target if the structure is still bearish. So let me take off. See, this is where like understanding the structure comes in. So we got a signal right here for price to go short from the indicator, but you have to understand the structure too. It will go down there if the structure is still bearish. Okay, so what candle is this? Well, it says that price is going to come down to 68.66. So it's going to take the indicators off. Okay. Say price is going to come down to 68.66. 68, 66 right here. So it says price is going to come down here. Okay. And I think we had the alert here. We had the alert December 19th, 2024. Okay. You have to test this on whatever you're trading. But looking at the structure, say it's going to come down here to 68.66, right? But I've been seeing that's only going to work if the structure is still bearish. Now remember, we had the signal right here. Let me make sure of that. Hold on. See that? We had the signal right here on this candle on December 19th. And it says it's going to come down to 68.66. So I've been seeing that will happen, but you got to make sure the structure is still bearish. So how do we know it's still bearish? Well, put on some of the drawing tools. This low right here, when this low was taken by this candlestick here, you have to look at the highest up close candle. Now you really have to go in a higher time frame, but it's just a 1 hour. So price is still bearish unless it could close above here. See that? So when we got that signal, let me turn it back on. When we got the signal here that price would be bearish, I looked at the structure and I was like, well, it hasn't closed above here yet, even though we had a spike up here. If it can take this low here, no, we hit the signal here. So I was thinking if this low could be closed below, then most likely we will come down here. Not just because the indicator says it, it's because the structure is still bearish. You see that? Hold on. When this low was taken here, the highest up close candle was important. So then when this low was taken here, the structure was still bearish unless it can close above here. So basically the order flow was down, is what I'm trying to tell you. So if you can understand the structure and do the whole indicator thing, then it can work, because you can see when the order flow was still bearish, and when it closed below, here, you could have you probably thought price would have came back up into this bearish order block. So you could have had a sell limit here if you not that deep with it just yet. But if you would have went short here, even if price retraced up, it's giving you a target of where price is going to go. So you can do your own leg work with this indicator blend right here. Another thing you can do is you can use the anchored VWAP. Okay, so let's go here. Now remember, this is for the free version. If you don't have the paid version because they give you two indicators. Now you have the anchored VWAP. Now the way this works is you need to put this on the session. So I think the Asian range starts at 2000. Let me see where we are in price, and then I'll put the anchor VWAP on there. Let me go back to my yellow line that I just drew. And then I'll put the VWAP. You have to put it on the candlestick that starts the session. So let me go back to where I am now because I want to show you. I don't know what the candles will look like to the right. I'm not trying to make myself look cute. I really don't know. So whatever prediction you see is just me back testing it. If I end up being right. So, okay, so I want to put this anchor VWAP at 8 a.m. with US oil. I believe that's when the session actually starts. So let's put it on 8 a.m. You have to put the VWAP on. See how you got 3 indicators now? You got 2 for free, and then you got 1 that's built in because they give you the volume profile and all of that as well, which is decent. But the VWAP is pretty cool. You just got to put it on the beginning session of this candle session. Okay, so you could play around with that as well and see if you could come up with different things. So let's continue. I just want to show one example. Let me zoom in. So based on let me move this over. Based on my own back testing with this indicator and the structure, I just showed you the indicator thing and the structure. I'm going to keep saying that. And the structure. Okay. So I want to show you what I've came up with when these signals happen. Okay. So we're looking for super trend or TBT to give us an indicator, a signal. And I'll show you now, according to the structure, when this high right here was taken, we're in a bearish trend right now. Okay. When this high was taken, it closed above here. It's kind of difficult to see with all the indicators on there, but we're in the bullish trend right now. So basically the structure is overall bullish. If we close below here, we may have a small shift below, but I really believe price needs to close below here if we're going to be back bearish. So I may be looking at that part a little bit. So let's keep going up. I just want to show a signal and then I'll end the video. Okay, so here we go. Now check this out. Now this is pretty solid. I haven't seen no failures on this now. This is a scalping strategy. Now what I've seen, now this is a short wick. When you get a sell signal you can test this on your own thing. This is on the 1 hour chart. When you get a sell signal from super trend, price is definitely going to take the previous candle's low. Now it's not that much movement right here because it's a short wick. But this is like not failed at all. So it'd be nice if we had a long wick. Let me see if I can get the drawing tool. If we had a long wick, then this really would be a nice play. So if we had a long bearish wick or something like that, and then you get the signal to sell, the next candle price may go up a little bit, but it's definitely going to take that low right there. So that could be a nice scalp based on the indicator as well. You can test that yourself. Okay, let me get this deleted. All right, so you'll see this is not a big move at all, but also what I've seen is, let me show you something else. Also what I've seen is not only when you see a sell signal from, this is on a 1 hour chart, but this is not gold, this is not futures, this is not stocks. I mean, this is oil, which is a whole nother, it's in all class all by itself the way it moves. So you have to really test this on your own and see what time frames, but I will show you this here now in the video. So first off, when you see a buy or sell from super trend on a 1 hour chart, but it could be the 30-minute chart, you got to play with it and see what works for you for whatever you're trading. Not only will it take the previous candle's low, when that signal sets up, it's looking to attack what ICT call a PD array. See, this is what I'm saying. You have to understand the structure and use the damn indicators. Like, if you haven't taken time to try to figure out how the structure work, then you're just going off of indicators. I mean, that's kind of sad to me. But especially if you've been doing this for a while, you should. This is what I was thinking about the other day. Well, actually, about maybe a year and a half ago, I was like, damn, I actually can see the structure to the point where I can know where to get out, like ICT. You know. So what I'm saying is, based on the structure here, we had a signal that to sell here, right? What I'm saying is, price definitely gonna take this low, but this is not a. So what I've seen is when we get these sell signals and these buy signals from the indicator, it's going to attack the lowest down close candle, the lowest bearish order block or bullish order block. So what I'm seeing is based on my own back test, I see that price is probably going to come down here to this opening price and either reverse or it's going to try to come down here to the mean threshold or the rejection block. Okay. It may even shoot for, because you have to look at the bodies of the candles. So this is a down close candle, but this one right here looks a little lower. So it may actually reach a little bit lower, but I'm going to be conservative. Remember, I do not know what the candles look like to the right. I don't. It's not like I scan to the right and I'm like, oh, let me shoot a video, try to look cute. I mean, I never have cheated myself that way with this stuff because you can't cut any corners with this stuff. But when you actually figure it out, I mean, once you see it, you can't unsee it, like ICT said. But what I've seen is when we have the sell signal from Super Trend, it's going to attack these bullish order blocks that's below it. Okay, these are bullish order blocks. So I see it either attacking this one, the combination of these two, or it may actually come all the way down here and try to attack this one. When I say attack means it's going to either try to get the high, the open, and it's going to attack that body and maybe hit the rejection block. But I could be wrong. Now remember, the trend is bullish. So the trend is bullish right now overall because, and notice I'm bringing in the structure of the market. I'm not just talking about a damn indicator because I've set myself up where I understand the structure and it took time to do that. But that's what confidence comes with this kind of stuff. People can say whatever they want about you, but it's like, I understand the structure. So what the fuck you talking about? But anyway, so what I'm saying is I see that, like I said, this order block right here is probably going to be attacked, meaning that I believe price is going to, we're probably going to see a reversal up temporarily and then push down because this is just understanding the candlestick analysis too. When you have no wick right here, this is a short wick, but if it was no wick at all, I'm for sure it would push up pretty hard and then go back down. So let's go ahead and do the stop loss and risk management. Now, what I've seen on these candles, I want to make sure I don't go to the right. I do not know what the candlesticks look like, I promise you. Now, my orange stop loss is usually the wick high. I know that's kind of far. That's a huge gap. I haven't tested this with the VWAP. Now, you see prices below the VWAP right here. I just was showing you that if you're going to use it, you need to put it on the beginning of the session, the VWAP. I have to remember to put the anchor VWAP on. This way you can get 3 indicators versus just 2 with the free version if you only have the free version. So there's a stop loss. My exit is going to be this wick high. I'm going to shoot for this wick high and the opening price of this bullish order block here, but it may actually try to come down a little bit lower. But remember, we're in a bullish trend, so this is just a retracement. Why are we in a bullish trend? Because price broke structure here. Price broke structure here. Let me show you real quick. Turn off the indicators. It's just a 1 hour chart. You probably need to be on the higher time frame. Let me pull the chart to the right so we make sure we don't see what the candles look like. So what I'm saying is when this low was taken, this highest up close candle became important for the bearish order flow to be lower. Then it took this low here. So now you got to look at this highest up close candle, not that one. Because see, some people are like, oh, it took this one. Now we bullish. Not yet. It has to close above here. back test it and see. You ain't took my word for it. So what I'm saying is, you see, when price is still bearish unless it can prove it can close above here. But this is just on a 1 hour chart. Preferably, you want to see it on a 4 hour or something like that. So it took it here. Okay. So price and you have to ask yourself, why did, and that's why I knew when I was back testing, I'm like, price has to come up here because it didn't break structure for no reason. It broke structure to definitely take out this high. You could have been very aggressive. You have to understand, when it's breaking the structure for real, this is a real breaker. This is a powerful breaker structure here, because this is the whole downward movement. This is not a micro structure movement. This is a breaker structure up, because price is bearish unless it can close above this high. Then when this low was taken, price is bearish unless it can close above this high. You see that? It came up here, it wicked. And once you've seen these two wicks, you're like, okay, this thing's about to drop. And you're like, okay, drop where? Well, we got to look at, this is a bullish breaker right here, because it couldn't come down to the bullish order block. See that? So it stopped here because on a lower time frame, this is a bullish breaker. But I've been looking at the structure so long, I can just tell that, right? So, but then the structure was still bearish until we had a close above here, because once this low was taken, the highest up close candle here became important, not this one. So you got to understand that. So when this was taken here, when this candle was closed above here, now the structure was bullish. So you have to ask yourself, okay, well, why did it break structure? It broke structure to take out this high. You could have been very aggressive on this high. It didn't break structure for nothing. It didn't break structure just to come up here and go back down somewhere. It's going to be aggressive on these swing highs. But anyway, I'm just explaining why the order flow is up. So when we see so what's about to happen right now, based on what I'm seeing, is it's probably going to come down to here, only to retrace down, only to go back up. Why? Because the structure is bullish. And this is a major breaker structure, because it broke all of this structure here by closing above this candle here. This candle here, I meant. And it did it here. I don't know if you can really see that on the replay, but so let's go back to the candlesticks, and then I'll end the video in the indicators. I'm just showing how to use the indicators and the structure. I mean, you could just use the indicators all blindly, but I don't know how you can walk around with confidence and you don't understand the structure itself. I'm glad I took time out of my life to figure this out, to figure the structure out and have a good clue on what's actually going on. So let's go ahead and remember, I do not know what the candles look like to the right. You can believe that or not. So let's go ahead and keep going to the right. Let's go back to that signal we saw. Here's the signal right here. So we got a bearish signal, and I'm telling you, my take profits are these pink lines right here, because I believe the price is going to come down here and attack this mitigation. This is a bullish mitigation block right here. This whole candle right here. It's a bullish mitigation block. Okay. But I believe price is going to come down here and attack this bullish order block. It may go lower, but that's fine. My stop loss is above the wick high up here. I could get stopped out, but I'm going based on what I've been seeing. Actually, I'm going to put a TP right here at this candle wick low, because this is guaranteed damn near right here. I just haven't seen any failures. But price on the next candle, it may open, take that low, then reverse up, or it may open at the exact same place and go back up higher. And as it's going higher, you need to be selling. Why? Because we know it has to take the low based on the indicator and back testing that to make sure that very next candle will take the low if it's a sell signal, and the very next candle will take the high of the previous candle if it's a buy signal. Now, let's use the market structure itself, because, I have people be talking crazy, like I don't understand the structure or some shit. I'm like, you really got me messed up. So according to the draw and liquidity, this don't work all the time. But if the previous candle closes below here and it closed below the swing low, then the draw usually is the previous candle's low. It's very high, probably 95% of the time. Well, I'm not going to say that. It's very high. Okay. Also, it closed above the consequent encroachment of this wick right here. So we hadn't even got down to 50%. So let's go ahead and move to the next candle. I'm going to bring the red candle up, meaning that I'm short. Hold on quick. These yellow candles is by sell limits. So meaning if price hits these levels, I'm going to go short. And I'm willing to get stopped out here at the top. But usually we'll put a Fibonacci on the body of this candle. So we'll put a Fibonacci on the body all the way up to the wick high, because that's where our stop loss is. We can break this up into standard deviations of 25%. So ICT teaches. This is 50%. This is 75%. Okay. So let's go ahead and get the candle to the right and end the video. See what happened. I might have got stopped out. Oh well. Okay, so the next candle on the lower time frame, we have to see if it just took the low, because it may have went up, but based on what I'm seeing with open, high, low, and close, it opened here, went down, took this low, came up, and then closed here. So according to my areas, I'm short here, and I have a sell limit here and a sell limit here and a stop loss here. So I might get stopped out, or my first order was hit. So I'm gonna remove this line. I believe, based on what I've been seeing, price is trying to attack this bullish order block. The high, the mid part, or the opening price. I really believe it wants to attack the body as well. Let's see. I'm probably gonna get stopped out. Who knows? Well, that's what it looked like. Boom. Well, just got stopped out right there. That's why I was saying I don't know what the candles look like to the right. That's why I was saying you can bet on price taking the next candle's low or the next candle's high if it's a buy signal with the super trend. I'm telling you. So let's continue to see what happened. Like I said, the order flow is bullish. So remember, I told you that. I told you that the order flow is bullish. So it's pushing to push price up. Even if price came down here and reversed, the order flow would still be bullish. But I did get stopped out because I don't know what the candlesticks look like to the right. Okay, well, but I'm telling you, once you actually backtest this, you'll see that when you do get a sell signal, you can see that price is trying to attack this bullish order block. But it's something I didn't see in the structure here, because other people watching the video have been like, well, it looked like it probably was coming lower anyway because this gap hasn't been rebalanced, meaning that we got to see price action go up and go down. So it's definitely coming back down to go. We need to see price action going down. We see it going up, but if you study ICT, you'll see that this what is this, a new week opening gap? Yeah, this is a new week opening gap, NWOG. So at some point, price is going to come back down here and give it bearish price action. So sometimes I'll write on here like bearish price action due, because that may happen a week from now, and I have to know, like, okay, this area is due for bearish price action. Actually, you know what? I should have seen that it was bullish because it came down here to do bearish price action. It's studying ICT. It came down here to do bearish price action, but this candlestick closed above the 50%. So I should have seen that the structure was probably not going to continue to go lower. But that all comes with practice. Let's see if we can do one more and I'll end the video. See, that's why I like doing these, because I learn a little more than what I understand anyway. So let's keep on going to the right. Okay, so here we go. This is what I'm saying. This is a powerful scalp. And what I like about this is that these signals are showing up. See, if you just have the TBT indicator on, you're not going to see a signal for a long time. Well, at least on oil, on this broker here, I don't see a lot of signals. Let me turn this on. I don't see a lot of signals for the TBT. We had a signal here, and that was Wednesday, December 18th, 2024. And here it is. That was 15 days ago. I mean, I'm not going 15 days without a trade. No way. Kind of like ICT, I kind of got a lot of things in the toolbox, but all his stuff has been time tested, because he got 32 years on me. Well, he got 28 years on me. So what I'm saying is, we just had a candlestick that gave us a green buy signal. So I'm going to go ahead and do this one and then I'll end the video. So remember, this candle just failed right here. I thought it would go lower, but this is what marking up the new week opening gap, the NGO, the ICT talk about. That's where this comes important. I should have saw that. I should have had this. I should have put NWOG, and I would have probably remembered like as a memory jogger. But it didn't close. It couldn't close below the 50%. So usually it ended up going lower. So it only wicked. So I should have saw that. Anyway, let's go here and let's do the draw on liquidity. This is the quick scalp. Price definitely coming up here, taking out this high, guaranteed. I might as well just say it. I don't know what the candles look like to the right. Now, when we have this, now remember the order flow is bullish. So you need to be looking to the left to see what else is left that this structure is trying to take out. Because when you get a buy signal, it's trying to take out some structure over here. Let me take off the indicators. Let's see, where are we? We at 71.90. So you need to be looking to the left, like, okay, well, what do we have over here? Let me zoom. Let's see if I can zoom in. I don't want to lose my place where I'm at. Let me drag this yellow. The yellow is showing me where I last left off at because I don't want to move the chart. I really don't know what the candles look like to the right. Like, I'm not one of these people who out here bullshitting, like trying to act like they know stuff that they don't. If I don't know it, I don't know it. I'm just going off of what I back tested. So since we got the yellow line there, I want to go to the structure over here and see what is price trying to attack. Hold on, let me actually see what the price was we were just at. Oh, what am I doing? Okay, hold on. What's going on? Go back to the yellow line. I'm trying to see what that price was when we had that. We had the buy signal. I want to get that price so when I drag the chart over, I can know. I want to make sure I don't go too fast because I'm gonna see the candles to the right. That'll be cheating myself. So not happening, especially with this stuff. All right, so I'm looking for the yellow line. Just trying to go slow so I make sure I don't go too far to the right and see the candles. Damn, where is it? Oh, Lord. Taking all day. Okay, so we're coming up on it. I just want to get the high of that candle so I can go over to the structure and see what is it trying to take out. Because I'm telling you, when you get these buy signals, it is trying to attack a bullish or bearish order block. And you probably see the example here. Then I'll end the video. All right, so okay, so here's the buy signal right here. So the high of this candle is 71.90. Okay, 71.90. Let me pull this over so I can 71.90. Now let's go over to the structure. Let's take off the candlesticks and the indicators and all the little bullshit. 71.90. This is for the real structure people, right? We don't need indicators. We use it for fun as extra confirmation. But gun to my head, I could figure out where it's going without it. And that's when you can walk around a certain way when you understand the structure. And people don't understand that you understand it. And that's cool. Right? So 71.90. So the candle closed here. So I see price. It's in a bullish structure. It's probably wants to take out this high, to be honest. It probably wants to come all the way up here. It may retrace down a little bit, but 71.90, that's where it closed at. So you got to look at these candles here. This is a bearish order block, and this is one too. But this one is higher. This one closed higher than this one, and it has a higher wick. So, and it has a gap up here that price may want to come up into. So, hey, what's going on? So that last video cut me off. So I'm just finishing where I started. We was at 71.90. So what I'm saying is, I'm about to prove to you that this is where trust in the structure makes sense. Now we're in bullish territory right now. I just showed you the breaker structure. So I'm telling you, when that signal is printed, it wants to attack the highest up close bearish order block and the lowest down close bullish order block. So I see it coming up here to either hit this in reverse, or it wants to come up into mean threshold of this gap. But to be honest, I really think it wants to take this whole high up here. So what I'm going to do is, my pink is my take profit. I'm going to be conservative. I'm going to put 2 positions in. I'm going to get a take profit right at this gap, and I'm going to put it at the bearish order block low. Okay, I'm going to put it at the bearish order block low, which is basically lines up with this, what ICT would call a fair value gap. Okay, but sometimes it stops at 50% of the gap. So that's what I'm going to do. Let's go back to the price action, and then I'm going to show you the entry, exit, and stop loss for this move here. So we just looked at the structure. So let me turn back on the bullshit, which is the indicators, right? For the people that want to do the work, which is okay. You know, we got a lot of tools out here in technology, but I couldn't look people in their eyes and tell them, "Can nobody touch me or fuck with me?" Knowing that the indicators I really didn't do the work to understand how the structure works. So I really did do that. So that's why I can talk to people a certain way, because I do understand this stuff. So in the indicators now it's like, okay, I believe it's going to do this based on the structure, number one. Number two, what the hell does the indicator say if I'm going to use one, right? So let's keep going. I'm looking for a yellow line to show me where my last place was. I don't want to go too far to the right, and then because I don't know what the candlesticks look like to the right. I really don't. Okay, so we're coming up on a dotted line. Now I'm looking for the candlestick that gave us the green indicator from Super Trend. Boom, right here. Now, like I said, if you don't believe that it's going to come up here, okay, you see that's really not that big of a distance. I'm telling you, when it prints out these sell signals and buy signals, it gets aggressive. But if you're not too sure, just get out here at the, let me put my pink line here at the top. I'm always going to put in a buy position or sell position to get out at the previous high, because that literally has not failed. So, because remember, price may open on the next candle. It may gap down and then come down and come into this wick, which ICT say market look at wicks as gaps. It may come into 15% or 25% of this wick. And guess what I'm going to be doing if I was on a lower time frame? I'm going to be buying as price is dropping. Why? Because if we know where price has to go, we're going to buy it. We're going to buy as it's dropping, because you're going to be instantly in profit when it reverses. That's ICT stuff, though, teachings. Okay, so this is the take profit. I'm going to put the red line here, which is symbolizing my short. I'm going to put a buy limit here, and a buy limit about 50% of this body. And then I'm going to put a green line here, because I'm going to go long on the open of the next candle, or really before this candle closes. If I think it shows the indicator buy or sell before it closes. So I'm putting on 3 positions here, 3 buys. This is going to be the first out, second out, third out. Now, where's the stop loss going to be? Same thing like before. I really believe strongly this is not going to get hit, but we do got a bullish order block down here. See, this goes back to the structure again. Motherfuckers ain't out there learning the structure. You a goddamn fool. Straight up. Because price came into it, took this high up here, and then it came back down into this bullish order block. So we might be done going down into this structure here for right now. So let's go. I don't know what the candles look like to the right of the chart. You can believe that or not. So let me slowly drag the chart to the right, to the left. All right, so it's not looking good right now. But look at this. This high up here was taken. Basically did a double top. What is it? The high is 71.90. Yeah, it did a double top. So I would have got out soon as I would have got out a tick or two before it hit it. Now that's a small scalp. You see price gap down when it first opened. So it probably went down a little bit on the 1 minute chart and then went up. So you could have been buying as price is going down. Why? Because we know it has to take out the previous high when that signal prints on super trend. See, this is using the structure. Other people videos you watch, they're gonna be like, yeah, man, when the signal prints, man, the EMA and the cross, you buy right here. They're not gonna explain to you how the structure works though, because they've been lazy the last few years, last few months, and they've been depending on indicators, which is a fool's journey. I mean, unless you just playing around with this stuff, it's cool. But I just wanted to really understand something like this, and I'm still learning, but I'm really strong with the structure now. All right, so this stop loss look like it might actually get hit. If so, um, well, actually, I would. Well, I still got two other positions on because remember, I got three. I got three longs on right now. So as far as risk management, this has to be done better than this. Um, but let's continue to drag the chart to the. Actually, you know what? I'm gonna go ahead and get out of those other two buys right now, and I'm gonna go ahead and just take a loss right here. So let me go ahead and I'll take a loss. That's fine. And guess what? I'm gonna take a loss here. That's what the orange line is. My thing is, if price comes back up above here, I'm getting in on what we call a candle break. Okay. So I'm gonna get back in on the candle break, and my target is still what it is at the high up there. These other two pink lines. Because it might actually try to come down here into this bullish order block, the opening price, or mean threshold here, or 25%, and then reverse. Just drag it to the left. But you see, if you do the scalp version of this pretty much don't fail. I just wish the wicks was longer. I wish I could have a wick like this, and then I have the buy on the super trend because price is gonna take out that high. I'm probably gonna get out at about 80%, to be honest, with a long wick like that. So let's continue to drag it to the left, and I'll end the video. Okay, stop loss still not hit yet. If I would have held those buys and price keep going up, I would have felt like a fool. Look like that's probably what's gonna happen. Boom! Look at that. Look at that. It didn't hit the stop loss. I got spooked. So I got out here, took a loss. But guess what? I'm back in on the candle break here with those two buys. Because remember, those two buys I had, I got out here because it was looking shaky. It's looking shaky. But remember, you have to, and see, this one thing I have to remember as well. The order flow is bullish. I just showed you to break a structure down here. I just showed you to break a structure down here. When this candle, well, it wasn't, where was it at? When I showed you on the chart about, I'm not going to show this all over again, but I'm saying like when this low was taken here, the highest up close candle became important. Then the structure closed above it here. So you have to ask yourself, why did it break structure? And that's why I was explaining that it was coming up here to take out those highs. But these highs already got taken. So now we have a buy signal. And, it's going to get aggressive on that bearish order block over there I just showed you. So let's go ahead and move the candles to the left now in the video. All right, so I got out of those two buys, so I took a loss. but I got back in here. I told you if price come back above this candle, I'm gonna get in on the candle break. So I'm in long again. So whatever money I lost right here, I have magic keys. So I know exactly the amount that was lost that I can get back in. I got in on the candle break. Am I gambling, or do I understand the structure? Okay, I understand the structure. Now you see a huge candle like that, it's going somewhere, and I just went all the way to the left and I identified the structure. Okay, so remember the order flow is bullish. We got a signal from that indicator thing that says buy, and I just told you it's going to try to attack these highs over here, which a bearish order block is inside of. And I just zoomed in on and identified those areas. I really believe it's probably really going to try to come all the way up here and take this high up here, but it may reject because we had a fair value gap right here. But I'm not going to bet on it coming up there. So I'm gonna be honest with you. I probably should, but we all got to understand the structure more than what we understand it at. So I'm holding my buy. Oh, we got a wick rejection right there. Damn. Boom. Hit my targets. I told you, look at that. It came all the way up there to the line I just deleted. But see, remember, I got in on the candle break here. So I was a little bit off by the target. This was the beginning of what they call a supply gap or a fair value gap. But looking at the structure again, I should have. There's something else I didn't see that I would have saw that price would have stopped here. But this was the beginning of the fair value gap, the low. And this is a bearish order block, the highest up close one. This is the low and the top of the supply gap or fair value gap, what ICT call it. So as you can see with the video, I didn't say I'm about to get out. I was holding my buy. I probably would have in real time. If I seen this rejection here, I probably would have sold one of those positions and still held on to that buy. And when I seen these kind of candlesticks, I should have been buying as price was dropping. But when you actually live, sometimes your brain just don't process sometimes. But if you know it has to come up here or you have a strong conviction, then as it's dropping, it's just coming back into this bullish order block. And when you looking at it in hindsight, you see what's really going on. But when you see that money going up and down, sometimes it messes with your head. That's why some people don't look at the money. They just look at the structure, which makes sense. So it was just coming back into this bullish order back to pick up juice, to go higher, to take out this high and go back higher and take out these levels. So I should have bought as price was dropping. But you only going to do that if you understand where it's going. Because when that low happened right there, it basically took what we call a rejection block right here. It could have looked like it was going bearish, but according to the structure, when this high was taken here, the structure is still bullish unless it can prove it can close below here on a 1 hour chart. See, it came below here, but it didn't close above it. Actually, it rejected above this open right here. So holding those buys, I would have got out here to my targets, and I should have held for price to go higher, like I said, because it would have came up here all the way to take out this high up here. I told you and look at this here. I said I should have held for this high here, but sometimes it just kept going higher right here. That's what I'm saying. When it creates those buy signals and you in the uptrend, it's gonna get aggressive on these highs. So that's the indicator thing, man. Hope you enjoyed. Thanks for watching.